Hello, everyone. I'm Matt Clark, research analyst for Money and Markets, here with this week's Stock Power podcast. Now, today's Power Stock produces and transports natural gas in the largest natural gas consuming country in South America. I'm going to tell you more about that in just a second. It does score a 99. The stock scores a 99 on our Stock Power rating system. But first, if you do have a question about a stock or maybe the broader market or the economy, and you'd like Adam, Charles, or myself to answer that in an upcoming video, email us. The email address is feedback@moneyandmarkets.com. We're going to flash that right down below. If we use your question in an upcoming video, in any one of our videos, we're going to hook you up with some very cool Money and Markets gear. This could include t-shirts, hats, sweatshirts, all sorts of stuff. We've got stuff and we want to give it away. So ask your questions. We use it. We're going to send it your way. Make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, profitable investment information. On the site, you can check out that proprietary Stock Power rating system. We rate thousands of stocks based on 6 fundamental and technical metrics. You can create your own watch list. You can track your stock performance. You can get all of our in-depth analysis, and you can do all that at moneyandmarkets.com for free. Now let's get right to it. The natural gas crush spurred by Russia's invasion of Ukraine left countries around the world scrambling for new supply. Basically, embargoes and things like that cut off the largest natural gas producer in the world, Russia, from the rest of the world. So no other countries were getting natural gas imports from Russia. Now, renewables became hot, and they still are, and there's a big future for them. Adam, Charles, and I firmly believe in the future of renewables, but until full implementation takes shape, which it hasn't yet, but it's going to, natural gas is going to be a primary source of electricity around the world. Now, countries are looking internally more than looking at countries. They're looking at companies in their own country to try to supply and offset what they're not getting by exports from either the United States or from Russia. That leads me to today's Power Stock. It's a 99 rated Power Stock, and I'm going to tell you more about it here. It's a company, like I said, that produces and transports natural gas in the largest gas consumer in South America. Now, you would wonder what that is, and most would probably think, well, Brazil, because Brazil is the largest country in South America, both in population and in area. But it might surprise you that it is not the largest consumer of natural gas in the region. That distinction belongs to its neighbor, Argentina. According to Interdata's World Energy and Climate Statistics 2022 yearbook, that's a mouthful, Argentina consumed 50 billion cubic meters of natural gas in 2021. For Brazil, it was only about 42 billion cubic meters. So by far, a pretty good spread there that Argentina actually consumes more natural gas because that's what its electrical grid is more dependent on. From 2018 to 2020, the use of natural gas in Latin America, this includes Central and South America, actually fell about 2.1%. But it is the primary source for electricity in a lot of these countries, and populations are continuing to expand, and that decline is going to reverse itself in short order. Now, the chart I'm showing you here shows natural gas consumption in Latin America. Now, from 2020 to 2024, that consumption is going to rise 8.5% to levels not seen since 2018. In fact, even before 2018. Basically, we're going to be setting records for natural gas consumption in Latin America in the coming years. Now, in this episode of the Stock Power Podcast, I'm going to share you details on a very strong bullish company whose stock earns a 99 overall. And it means, again, that we expect it to beat the broader market by at least 3 times over the next 12 months. The company is, and I'm going to, I might butcher this just a little bit. It's Transportadora de Gas de Sur SA. It trades on the New York Stock Exchange. The ticker symbol is TGS. And please, no one make fun of me for my lack of pronunciation there. It was on the fly, and I just didn't do it very well. If I practiced more, I probably would have got it, but I didn't, and I apologize. TGS transports natural gas along with producing and commercializing natural gas liquids in Argentina. Remember, Argentina, the largest consumer of natural gas in all of South America. It uses about 5,769 miles worth of pipeline to transport gas to power plants and industrial customers all across the country. Now, remember, Argentina is pretty good size itself. It's not as big as Brazil, but it is very north to south. It is very narrow. So these pipelines run long distances, and they need to be very reliant to get product from one place to the other. And TGS does just that. Now, TGS, as you see, scores a 99 on our proprietary stock power rating system. It means we're strong bullish on the stock and expect it to beat the broader market by at least 3 times over the next 12 months. It scores highest on our value factor, where it scores a perfect 100. That means it is in the top percent of all stocks we rate on that metric. And it's got a 99 on our momentum factor. And I'm going to get to that in just a second. But first, it is an outstanding value stock. Its price to ratios, which are price to earnings, price to sales, price to cash flow, price to book value, blow the doors off of its competition. For example, its price to earnings is currently about 3.21. Now, compare that with the midstream energy industry average, and this is all companies traded on any exchange in the U.S. that are characterized as midstream energy, and there are a ton. The average for those companies, 18.25. So TGS trades at nearly 6 times lower the PE ratio than its peers, making it extremely valuable in terms of the value metric. Its price to cash flow is 1.93 compared to the industry average of 8.16, and the company's price to book value is 0.52. Its peers traded an average of, get this, 2.18. So as you can see, TGS is considerably a better value stock than others in the midstream energy industry. Now, let's take a look at its stock movement. TGS made a huge 84.4% jump in share price from November of 21 to April of 22. The broader market sell-off pared those gains back, but the stock still remains about 4.3% higher over the last 12 months. So from where it was 12 months ago today, it's still about 4.3% higher. Its price movement is right in line with the midstream energy industry peers. But what's really telling here for me is the future projections for the company's total annual revenue. In 2018, TGS recorded $415.3 million in total annual revenue. That's not bad. That rose to $790.9 million the following year. So the very next year, it almost doubled. However, COVID-19 pushed that revenue back down in 2020, but the company is building it back up and building it up in a huge way. Now, the company is on pace to have total annual revenue of, are you sitting, $1.4 billion by 2024. That's a 242.5% increase in annual income from 2018. It's huge. It's a massive gain in the amount of income this company can expect to have. TGS is instrumental in feeding the natural gas beast that is Argentina. And remember, because it's the largest consumer of natural gas in South America, even beating out Brazil, the demand isn't going to go away anytime soon. And this is why I see very good things on the horizon for TGS. Now, let's take a look and shift gears to our YouTube poll question from last week. There's a lot of, we wanted to kind of tap into your summer madness, if you will, and ask you how you like to beat the summer heat. I'll tell you, for one, I am an ocean guy. I live in South Florida presently. Love the ocean. When I lived in South Carolina, always used to love to go to the ocean. That's my thing, but not necessarily everyone feels the same way. In fact, 32% of those who voted said that they prefer firing up the grill and swimming in a pool, which I love as well. I really enjoy that. But if I can go to the ocean, I'm going to take that chance if I can. 29% said they were content with some shade and a good book. Also a great idea. Although it's kind of humid here, and even shade doesn't really necessarily make it any better to get out of the summer heat here in Florida. 23% of you said you're going to buy those tubes of sunblock and head over to your closest beach. I'm right there with you. 13% would rather head to the movie theater and watch the latest summer blockbuster. All great options. Gary added on our YouTube page, he said a shady tree by a river or a lake. And in Kansas, that's what I used to do all the time. I used to try to find a closest river, lake, or pond and just kind of sit back, relax, maybe do some fishing if I could, or something like that when I had the chance. So, but now I live next to the ocean, so I kind of like to take that in as much as possible. No matter how you beat the summer heat, all of us here at Money and Markets certainly hope you are enjoying your summer months. It's going by quickly, much faster than I hoped, but I certainly hope you all are enjoying it. Thanks to everyone who took part in our weekly poll. You can vote in our weekly poll question on our YouTube page. Just go to our YouTube page and tap that community bar up top there, and that'll take you right to the question right up at the very top. If you have a question about a particular stock or a sector or the broader market, or maybe something about the economy, and you'd like Adam, Charles, or myself to address it in any one of our upcoming videos, email us at feedback@moneyandmarkets.com. We'll put that right down there, and we'd love to get your question. And for you asking and us using it, we're going to send you some very cool Money and Markets gear like t-shirts, hats, sweatshirts, all sorts of stuff. And we're going to get that out to you for you asking a question and for us using it in an upcoming video. Also, head over to moneyandmarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple investment information each and every day. Also, I've got my new Stock Power daily email that goes out 5 days a week, Monday through Friday. And I find you that one highly rated stock power stock that is that we think is going to beat the market by at least 3 times over the next 12 to 24 months. And then while you're at moneymarkets.com, you can check out that Stock Power rating system. On our homepage, just go up to the top right-hand corner there, and you're going to see a search box. Type in a ticker or a company name, and you can pull down the ratings of thousands of stocks. And you can see the rating of the stock, fundamental data, stock chart, add stocks to your own watch list. You can do all that at Money Markets, and you can do it for free. That's right, the big four-letter word, for free. That's all for me this week. I certainly enjoy doing all these, and really glad that everyone listens and interacts and takes part. Love to see that. If you have questions or have comments, feel free. Right down below on YouTube, or you can email me, feedback@moneyandmarkets.com. Until next time, this is Money and Markets research analyst and host of the Stock Power Podcast, Matt Clark, wishing you all safe trading.